Three things, I think, primarily driving the change, three things investors are afraid of right now. Recession and growth outlook is the biggest one. Trade war, politics, et cetera, is the next. And I think finally, impotent monetary policy is something investors are starting to fear more and more, and it was evident from this data.
The impotent monetary policy story is the one I want to explore with you initially. What are the big worries? That the Fed is out of ammunition, that the ECB is out of ammunition, or it just won't work anymore?
Well, I mean, clearly, policymakers, through incredibly unconventional policies since the financial crisis, have really failed to stimulate the kind of growth and demand-driven inflation that they wanted to see. So you look at the Bank of Japan, low interest rates, maybe forever. You look at European Central Bank, maybe negative, maybe low interest rates, forever. And if the Fed were to join that club, I think that's sort of game over for the growth outlook for the developed world. That's what investors are afraid of. And so when we look at the survey data, what we find, investors think, when we ask them, what would it take for the Fed to cut interest rates and support equity markets think it takes a big correction, 10% or more, to get here. It thinks on trade policy, policymakers need 20% almost downside before they would act. And so that fear that policymakers won't support the equity market without a whole lot of pain, I think is driving a lot of these bearish allocations.
So Jared, we saw a growth scare in 2011, 2012. We saw one in 15, 16. We didn't see global growth expectations plunge quite like they did in this survey. Do you think things are overdone here? Do you think we're capturing too much defensiveness, too much pessimism?
We're always contrarians. When we see, for example, the cash allocation spike from 4.6% to 5.6%, when we see all these measures of defensive allocation, it tells us that investors are overreacting. It tells us that there's a lot of bearishness out there, and that's why, as contrarian bulls, we think this is an interesting time actually to get out of treasuries, to get into cyclicals, and really look for a big change.